No, I was just wanted to. You mentioned you framed the conversation surrounding tech mega caps as a potential store of value. So that just made me curious to think a little bit more about your investment and trading framework and how you sort of operate in the global asset class scale. And then I thought this might be a good way for us to shift gears into talking a little bit about your book. And for that, if you could set the stage into some of the asset classes and instruments that you look at and that you trade in, and then maybe walk us through a little bit about, from a 30,000 foot view, what happened in March 2020
Okay.
from your view.
Well, that's a very broad question, but I'll see what I can do in the next few minutes, right? So, uh, first of all, I do global macro, which means I basically can double on anything I want to double in. Obviously, I cannot be an expert on everything, so I probably do less research, kind of individual stocks or credits. I cannot know anything about them. If I like gold, I might buy gold. I might buy gold mining index, right? Will I buy individual gold miners? Well, maybe if I like some research on them, but it's not kind of my core. I don't come to my whatever meetings internally and say like, hey, I like this company which does this widget. Let's see if it can buy them. I look more about like asset classes. And what is important about my approach, I don't feel that I have to be always like short or long stock market, short or long euro, short or long interest rates. I don't have to have a view on any of the core macro assets. I could have no view on dollar euro at any given moment. What I try to do, I try to find places where I have, according to my criteria, skew odds in my favor and focus on those. And wherever I can, build a balanced portfolio out of those trades. Now, when crisis like pandemic hits, uh, obviously you had your positioning before that, and I talk a lot about my book about how you can position, why you will position certain ways, and also certain ways that you can, on occasion, have kind of a free crisis protection options or really cheap crisis protection options, and I've used them a lot in 2020. Setup was not as favorable for me, for example, this time. Things that you would need to buy, you would want to buy if you were thinking about the war getting out of hand in Europe, were not free, even if you had that view, right? It wouldn't be cheap or free to protect yourself against that situation right now. But in 2020, it was cheap or free to protect yourself against pandemic. And when it's cheap or free, I do it, right? So, but when the crisis actually does happen, the most important challenge of the trader is to just kind of leave behind what you had before crisis, in a sense like, okay, those are the positions. We made money or we lost money. We got lucky and we made money or we got unlucky and we lost money. Now we have a new portfolio. And what should we do with this portfolio throughout crisis? I talk a lot about, I might maybe straying a little bit to your question, but it's a good segue into this. In my book, The Trades of March 2020, I used all the poker analogy. If you're on a winning night, like you're up money, you're feeling good about your game, you're feeling relaxed, you have time to go get yourself a drink, go to the bathroom, freshen your face. Maybe it's a long poker session, but you're winning. You will have the advantage. I think this was also, what is it, the movie Hustler about pool, right? Too. And they also show like one guy like keep playing and drinking, and another guy is like taking a break, relaxing, and right. So this is how you win, by starting with a winning hand. It's much harder if crisis blindsides you if you're under pressure, and this time like your portfolio was not well prepared for it. And honestly, it's 50-50. You're not going to be in my career, whenever exogenous events happen, sometimes it's favorable, sometimes it's unfavorable. You cannot be always, you're not going to be so lucky that every time there's something big, truly unpredictable happens, it will position a direction. So if it's against you, you have to take your losses, right? And then you think like, okay, so no, what do I do next? What positions do I hold to? What I can put on, and how to take advantage of it. And the key, so I made a subtitle for my book, for my pandemic book, A Shield Against Uncertainty. What I meant by this is that like how those environments are very uncertain. We knew how uncertain it was during the pandemic. Nobody knew like how bad it is, how it's going to spread, what are going to be the policy responses. We really didn't know what was happening. And right now, there's a lot of like theorizing about geopolitical situation, but people are projecting anything from peace talks and ceasefire within 24 hours to nuclear war, right? We're having such a wide range of possibilities. Honestly, I don't think anybody knows a really clear answer of what's going to happen, even on a very short horizon. And markets are gyrating with these mood swings. The idea, what I did in the pandemic times and what trying to do now and what I think other traders trying to do now is to see what it is that we can kind of see through these events, what things are certain. Are there any bets that in every reasonable scenario will eventually converge? Because there are some things that don't have to converge. Like, for example, will Russian economy recover? Like, will Russia become reintegrated in the world community? You can make odds on it, but there is no specific like reason or belief. Russia could go the way of like Iran or Venezuela, right? After this war, it's possible. There are precedents to such things happening, right? Or it could be have somehow a negotiated settlement, some changes, and basically kind of be put behind us in a year or two, right? All of those are possibilities. Hard to bet on that. Will what's going to happen to oil prices in the next few weeks? Very hard to imagine. But just as during COVID, I think uh, during COVID, I thought that, well, oil prices went very low, but 2, 3 years from there, one of the other way pandemic will pass. So the forward oil contracts to me, when I was looking at 2022, 2023 oil, I was like, well, it's going to normalize to like $60, right? Now, I didn't think and I didn't bet on it going to 110. I wish I would did, of course, but that's not what I was speculating on. I was just thinking that it's going to go from 35 to 65 back to normal, whichever way the pandemic will play out. Because what I knew during the pandemic, this is what I talked about. Like the mantra was that pandemic will pass, liquidity will stay. During pandemic, we knew that the policymakers will keep adding liquidity till it becomes excessive. And that was the game to play in March and after March 2020. So that's the game I try to play. Not bet on how quickly liquidity will arrive, what's going to happen to the virus, but the fact that eventually there will be enough liquidity and things that benefit from it will go up. Uh, how do we play it now? It's hard to tell, but obviously, like we're in it. How do you play it now? What do you look at? With energy, I think my guess is that energy will normalize to some trends which were fundamental to it before this crisis. But there could be some changes because Europe can move to more energy independence. Many countries can increase production. People will like try to decouple. If Russia is allowed to sell energy again, they might sell more than before for economic recovery. There is all those things that could be looked at. So I actually think that long-term perspective for energy became more negative than they were 2 months ago. But it's a hard bet to make. I'm kind of betting on the fact that Europe will restabilize and come back, possibly with less energy dependence, but most likely with they're pretty fiscally aggressive, and the fiscal aggressiveness, military budgets are going up. They'll have more fiscal expenditure. So I think uh, there are some opportunities in that world, like of just kind of Europe stabilizing and possibly European stock markets doing better than on a relative basis, possibly euro doing better on the crosses going forward, euro and pound. I think, for example, there are like defensive things. If you think it's hard to judge like where you think euro Swiss or euro yen should be those defensive crosses. So like people are panicking, they're selling euro, they're buying Swiss franc. But if you really think about this, one way or another, the situation will resolve. So if you don't think Swiss franc belongs at 100, if you think it belongs at 105 and 110, if you buy it now, sooner or later the situation will resolve. And then euro Swiss will go to the certain other place. If you think that euro yen belongs at 135 rather than 125, again, once the situation will resolve one way or another, it'll normalize. Of course, there are off-chance scenarios of very severe escalation, nuclear incidents, or maybe even just a really protracted war, which something like replay of the Great Northern War of early 1700s, when whole Northern Europe gets pulled into something. Yeah, you can look at those outlier scenarios. Just as with pandemic, we could say like, what if COVID gets so bad that we're shut down for 5 years, right? But we have to take our chances. Those are clearly low probability scenarios. Like there is no argument that the likelihood is that one way or another, with whatever the fate will be of the Ukraine or Russia, situation will stabilize in Western Europe. So there might be potential for bets there on that, long horizon bets.